Welcome to Invest Giant. Learn, invest, build your net worth. Today, we're diving into the top 8 Vanguard ETFs that are perfect for buying and holding forever. These ETFs are known for their stability and growth potential, making them excellent choices for long-term investors. We're talking about building a solid financial future, one ETF at a time. So grab your notebooks and let's get started. Alright, let's kick things off with a powerhouse in the ETF world, the Vanguard Total Stock Market ETF, also known as VTI. This ETF is like the ultimate set-it-and-forget-it investment for your portfolio. It gives you exposure to the entire US stock market. With VTI, you're investing in a diversified basket of thousands of US stocks, big and small, across all sectors. It's like owning a tiny piece of the entire American economy. VTI has a solid track record, aiming to track the growth of the US stock market. One of the things I love about VTI is its low expense ratio. With VTI, that expense ratio is incredibly low, meaning more of your money stays invested and working for you. Yes, the stock market has risks, but VTI's broad diversification helps spread that risk across thousands of stocks. By holding VTI for the long haul, you're giving your investments time to ride out any short-term market fluctuations and potentially benefit from the power of compound growth. So, if you're looking for a simple, low-cost way to invest in the entire US stock market, the Vanguard Total Stock Market ETF is definitely worth considering. Remember, we're talking about long-term investing here. So if you're looking for a simple, low-cost way to invest in the entire US stock market, the Vanguard Total Stock Market ETF is definitely worth considering. Now let's shift gears and talk about a crucial component of any well-rounded portfolio: bonds. Specifically, the Vanguard Total Bond Market ETF, or BND. While stocks are known for their growth potential, bonds are all about stability and income. BND invests in a diversified portfolio of US bonds, including government bonds, corporate bonds, and more. This diversification helps to reduce risk, as you're not putting all your eggs in one basket. Bonds generally have lower returns compared to stocks, but they also tend to be less volatile. Think of it this way. When the stock market takes a dip, bonds can act as a buffer, helping to cushion the blow to your overall portfolio. BND can be a great option for conservative investors or those nearing retirement. By including both stocks and bonds in your portfolio, you're creating a more balanced approach that can help you weather market storms and achieve your long-term financial goals. So if you're looking for a way to add stability and income to your portfolio, the Vanguard Total Bond Market ETF is definitely worth exploring. Let's talk about a true legend in the investing world, the Vanguard S&P 500 ETF, or VOO. This ETF tracks the S&P 500, an index of 500 of the largest publicly traded US companies. One of the biggest advantages of VOO is its incredibly low expense ratio. This means more of your money stays invested, which can make a huge difference in your returns over time. So, if you're looking for a low-cost, high-quality way to invest in the heart of the US stock market, the Vanguard S&P 500 ETF is a fantastic option. Alright, investors, let's broaden our horizons and talk about going global with your investments. The Vanguard Total International Stock ETF, or VXUS, is your passport to the world of international stocks. International markets offer diversification benefits and growth opportunities that you might miss out on if you only focus on US stocks. Emerging economies are on the rise, and companies in developed countries are constantly innovating. By investing in VXUS, you're tapping into the growth potential of thousands of companies across the globe. VXUS tracks a broad index of international stocks, covering both developed and emerging markets. This diversification helps to reduce risk, as you're spreading your investments across different countries and economies. International investing does come with its own set of risks, such as currency fluctuations and political instability. But by including international stocks as part of a well-diversified portfolio, you can potentially mitigate these risks and enhance your overall returns. International markets can often move independently of the US market. When the US market is experiencing a downturn, international markets might be performing well, and vice versa. This can help to smooth out the ups and downs of your portfolio over time. So, if you're looking to expand your investment horizons and tap into the growth potential of the global economy, the Vanguard Total International Stock ETF is definitely worth considering. Let's face it, technology is eating the world. From smartphones to artificial intelligence, the tech sector is constantly evolving and disrupting industries left and right. If you want to be a part of this tech-driven future, the Vanguard Information Technology ETF, or VGT, is your ticket to ride. VGT invests in a basket of technology companies, including giants like Apple, Microsoft, and Nvidia, as well as smaller up-and-coming players in the tech space. This ETF gives you broad exposure to the companies that are shaping the future of how we live, work, and play. The tech sector is known for its growth potential. Just look at how tech companies have exploded in value over the past decade. VGT isn't just about chasing the latest tech trends. It's about investing in companies that are at the forefront of innovation, companies that are developing the products and services that will shape our world for years to come. By investing in a diversified ETF like VGT, you're spreading that risk across a range of tech companies, which can help to mitigate some of that volatility. So, if you're bullish on the future of technology and want to invest in the companies that are driving innovation, the Vanguard Information Technology ETF is a great way to gain exposure to this exciting sector. Now let's talk about an ETF that's perfect for income-seeking investors, the Vanguard High Dividend Yield ETF, or VYM. This ETF focuses on companies that pay high dividends, which means you get paid just for holding onto the ETF. VYM invests in a diversified portfolio of U.S. companies with a history of paying above-average dividends. These are typically well-established companies with strong financials and a track record of sharing their profits with investors. Dividends can be a great source of passive income, especially for retirees or those looking to supplement their income. By investing in a diversified ETF like VYM, you're spreading that risk across a range of dividend-paying companies. VYM isn't just about chasing the highest dividend yields. It's about investing in companies that have a sustainable dividend payout ratio, meaning they can afford to continue paying those dividends over the long term. So if you're looking for a way to generate passive income from your investments and potentially benefit from the power of compounding, the Vanguard High Dividend Yield ETF is definitely worth considering. Let's talk about finding that sweet spot between growth and value investing. The Vanguard Growth ETF, or VUG, does just that. This ETF invests in a blend of large-cap growth stocks and value stocks, giving you a balanced approach to investing in established companies with growth potential. Growth stocks are typically companies that are expected to grow at an above-average rate. Value stocks, on the other hand, are companies that are considered undervalued by the market. VUG aims to capture the best of both worlds by investing in companies that exhibit both growth and value characteristics. This balanced approach can help to smooth out the ups and downs of the market. VUG focuses on large-cap companies, which are typically more established and less volatile than smaller companies. VUG has a history of solid performance, demonstrating the potential of combining growth and value investing. So, if you're looking for a balanced approach to investing in established companies with growth potential, the Vanguard Growth ETF is definitely worth exploring. Alright investors, let's talk about aligning your investments with your values. The Vanguard ESG US Stock ETF, or ESGV, is all about investing in companies that prioritize environmental, social, and governance (ESG) factors. ESGV tracks an index of US companies that meet certain ESG criteria, such as reducing their carbon footprint, promoting diversity and inclusion, or having strong corporate governance practices. ESG investing has been gaining traction in recent years as more and more investors seek to support companies that are making a positive impact on the world. ESG investing isn't just about feeling good about your investments, it's also about identifying companies that are well-positioned for long-term success. Companies that prioritize ESG factors are often better equipped to manage risks, adapt to changing regulations, and attract and retain top talent. Different investors might have different ESG priorities, and it's important to choose an ETF that aligns with your values. If you're looking for a way to invest in companies that are making a positive impact on the world while also seeking competitive returns, the Vanguard ESG US Stock ETF is definitely worth considering. ESG investing is still evolving, and there's no one-size-fits-all approach. There you have it, investors. 8 incredible Vanguard ETFs that can form the foundation of a rock-solid investment portfolio. Remember, these ETFs offer diversification, growth potential, and the peace of mind that comes with long-term investing. Before making any investment decisions, consider your investment goals, do your own research, and consider consulting with a financial advisor. Thanks for watching, and don't forget to like and subscribe for more investment tips. Happy investing!